There are a lot of concerns at the moment about a recession coming through, with developed economies showing some fragility now in the GDP numbers. Of course, with interest rates going up because of the central bank's determination to conquer inflation. Of course, the result of that is inevitably a slower economy wherever you're looking. And we've got central banks raising interest rates all over the Western economies, the Western style economies. John Meyer joins us now from SP Angel with a look at this and what it means for the commodity sector. John, welcome. Let's pick up first of all on this idea that we've got economies softening. You've got, of course, in China, we're hearing demand beginning to fall away for a number of different reasons. How should we view this from a commodity point of view?
Global growth is starting to contract. We saw the global figures out this morning from JP Morgan. That aggregates the world GDP growth. And yes, it's contracting. No enormous surprise there, because there appears to be zero growth or close to zero in China right now. They might give us some figures that show it to be more positive, but we don't think so. We can see Europe heading into a bit of a car crash with the energy crisis and problems keeping European industry open. I see there's a big aluminium smelter in France that's running at 80% capacity. I'm surprised they're even running it at all, frankly. So they're going to have to cut that back further over the winter in order to create enough electricity for households and more important industries, shall I say. And yes, I think that in many respects, Western policymakers are artificially creating or exacerbating the slowdown. The US is pulling industry back out of China, and that's creating growth and a degree of inflation, in fact, in the US as well. Not helping China, but of course China's not helping itself, because China has been sticking to its zero COVID policy. We now think that China is going to start to relax that. In fact, a while ago, they brought in what they call dynamic zero COVID policies. A lot of administrators, we think, didn't really go for that. They're all trying to show how staunchly communist they are. And we know in October, they're now going to have their big 5-year planning meeting. And of course, there's a huge change in the political leadership. A lot of the old boys will retire and new guys are coming in. And of course, if you want to show how dedicated you are to the communist cause, you're probably going to lock down a city or two while you're at it and carry favour with President Xi. So, yes, there's a lot of things going on here. Not good for commodities right now.
Just pick up on this point about reshoring these jobs, because moving jobs away from what had previously been sort of areas of low cost, because that was all part of this idea about manufacturing stuff, wasn't it? Using places like China for low cost, repatriating those jobs, or the method of making that material back to, let's say, the US from China, that is going to stoke inflation in a really big way, isn't it? The other question is why are they doing that, given that it's inflationary?
So there are different elements going on here, and there's a double whammy for China, because there's a drought in China, as there is here in California and various other places, and Europe, of course. Don't forget the Danube levels are very low. And so there's less energy available in China right now. So factories, particularly foreign factories, feel they're being hard done by, and they're moving a certain amount of their industry to more secure areas. They're going to Vietnam, Laos, other Southeast Asian countries, and back to the US. Not much point coming back to Europe right now, because we've got our own crisis developing. But in the US, everything's much more settled. You're not going to get shut down by the authorities in a hurry. There's still plenty of energy. It might be coal-fired power, but whatever. It's the energy is still there. So China is losing out one way or another. And probably Western manufacturers feel they're a bit hard done by. And if you're running a big assembly line in the States, you need to make sure that you're not suffering the logistical problems that you've had over the last few years. So you'd much rather your products, your components were being made outside China right now in more stable jurisdictions.
So this is all part of this idea that supply chains should be shorter, geographically at least. I think this is something we were talking about, wasn't it, during COVID, when COVID, the breakdown between communications and communities and cross-border and so forth meant that these supply chains got broken. So I guess it's all part of this idea that to secure the long-term production, as you say, and make sure that you've got control over things. What does all this mean for the commodity markets. I suppose if you're demanding commodities, whether you've got jobs in America or Europe or China, I guess the bottom line is it's demanding the same commodity. But the thing is, in this case now, is that China owns so much of that commodity.
China owns a certain amount of it, and it does control certain commodities, rare earths. It controls a lot of lithium, quite a lot of cobalt. The West is starting to catch up quite fast. I mean, we are doing deals at the moment as an investment bank where we're bringing money into lithium companies, rare earth companies, those sorts of things. And that money is still there, which is great. Those commodity prices have come off a bit. Well, lithium's still pretty high. Cobalt's still high, and that's still quite hard to find. Rare earths, yes, there's money there, and there are going to be new processes for processing of rare earths. So one of the side benefits of this is I think we're going to develop some cleaner metallurgical processes for the processing of these metals. And it won't just be the rare earth process being developed by Rainbow Rare Earths, which I think is going to be amazing. But that technology will then go on for the processing of other metals going forwards. And I think that for me is really important. It means we get away from dirty, smelly furnaces that pollute the atmosphere, and we get more into clever chemical processes which work much better and where there's a lot less effluent to come out.
Okay, I was going to ask you about that, to ask you where the demand is going to start to pick up first. You're talking there about battery metals, aren't you? These sort of new tech metals that everybody is talking about at the moment. Do you think that is going to be the way in which we come out of this, this, I won't call it depression, but this drop that we've seen, this likely pullback in growth? Is it the battery metals that's going to pull us out of that? Or is it going to be infrastructure spending? Is it going to be the big contract works that are sponsored by governments to build hospitals and schools and roads and rail?
It's a very good question. We don't know when everyone's going to hit the button on new infrastructure spending. Remember, it's expensive, and balance sheets or national balance sheets are tight at the moment. Yeah. Different people have different views on how much borrowing countries should take on. But if you're in Italy, it looks pretty tight right now. And in China, they are stimulating. We've heard news in the last week of 2 new projects that are coming through, big rail projects, big housing projects. Now, there's one thing is to announce it. The next thing is to actually start to break ground and make the metals for those things. And they have a few structural issues in China to deal with at the moment. They have a grande housing debt crisis, plus a few more of those big housing developers, and a trading group that clearly is in trouble as well. So there are other, when an economy is in a lot of strain, there are other problems that come out. And who knows if we're going to see another Asian crisis develop, for example. That worries me in the background. But in the meantime, America is going quite well. Even though they're raising interest rates and they're working really hard to slow their economy down, they've still got fantastic jobs growth, 300,000 extra jobs last time. And that's ahead of expectations. That's really good. As industry gets reshored, as America says, no, we are leading the world, money is coming back out of China. So for years, people were investing in China into new factories, new this, new that. Now that money is not available to China, and it's actually flowing the other way, which is really interesting. Of course, the Chinese are going to try and stop that as much as they can, but there's only so much they can stop.
Make America great again. We heard that from Trump, of course. That's now becoming a little bit of a more difficult thing, I think, under Biden. But certainly it seems to be coming true, and America is now, as you say, trying to own more of the means of production.
Well, interestingly enough, as the Fed raises interest rates, money naturally flows into the US because rates are higher and money's looking for higher interest rate. That props up the US dollar. That effectively reduces the effect of imported inflation. Yep. Now, they don't import as much as we do, for example, or China does. So as the renminbi or the yuan goes down, they start to import more inflation. That doesn't help them so much. Now, we haven't mentioned the war in Ukraine. Of course, that's a huge problem. European metals smelters are going to have to slow down. Many of them are going to have to stop in the winter. That's my view. I think electricity is going to have to be preserved. One of the issues with the Kherson nuclear plant is the president of Ukraine, I believe, promised or pledged that electricity for Germany. if I think Russia's going to try and stop that from happening. So we're seeing a lot of activity around there. Okay, that's not necessarily the biggest thing going on in the world economically, but it does have an impact on just about everything, unfortunately, particularly on our own costs. But in reality, the real conflict in the world right now is China versus America, and which one is going to come out on top. And right now it looks like the Americans are leading the way.
And of course, as you say, we get caught in the crossfire to some degree with sterling as it is on its way down. Of course, that creates our own inflation, as you say, because of pricing. I just want to bring up a couple of charts. Let me get, if we can, this is copper. We recently hit down below the 7,000 level back, what was that, July this year. Since then, there's been a little bit of recovery, but the broad sweep of things is since the beginning of the year, it's been on the way down. I'm just going to run through some of the other well-known base metals. Zinc, same sort of price action, not quite as low as it's been recently, but nonetheless well off some of the highs we've seen earlier on this year. And just to round things off, aluminium, which is an interesting one because aluminium takes a lot of oil to produce aluminium, and of course the oil price has come down. So in theory, this perhaps maybe should be not as low as it is. And you mentioned the fact that in France you've got smelters coming offline and so forth. So aluminium on the way down. If we can bring up the chart again just to show you, because I wanted to show you this drop here. We've had aluminium now trading at levels not seen since March 2021. What do you say about where we are in this part of the cycle? I'm not going to ask you to tell me when the turnaround is going to come because no one knows when that is. But what is going to bring us out of this? Is it battery metals or what?
Certainly battery metals and metals that are important for the electrification of our economy. Copper, absolutely, because we are going to be building more windmills, more solar farms, more hydropower, whatever we can to get away from Russian gas, Russian oil, and reduce. And in fact, solar and wind are really competitive right now. I mean, they used to feel quite expensive. They're not looking expensive. In fact, they're looking really competitive. And it's very unfortunate that all these different forms of electrical generation are connected to the gas price, because that's what's dragged them all up. Because in reality, the cost of producing wind and solar hasn't changed. So our electricity prices should be much cheaper. So if the government can figure out a way to decouple gas prices from other forms of energy production, then we can go back to kind of how we were to some degree. Unfortunately, most of our peaker production for the national grid is produced with gas-fired power stations. So it's always that marginal bit that changes and determines the price level of something, and that's a problem for us right now.
But wrapping all this up, we were talking about, do you feel there is potentially more downside to come before we start to find a surer footing for commodity prices and so commodity companies?
Yes, I think this is a trading market we're in right now. I don't think it's real supply-demand fundamentals. I think there are manufacturers who are dumping metals where they need some cash, because that always happens. Traders who are deleveraging, whole lot of deleveraging going on. Banks saying, "Oh, this is looking risky. We're going to give you 80% of the money that we said you were going to give you." That kind of thing. And I think we're seeing that in all markets: property, all the different types of lending, and that naturally squeezes commodities. I don't think it'll last too long. I think we've got to get through October, because October's always got its own witching hour, and then I think we'll start to pick up again. Now the question is, how much do we pick up in November, December? Do policymakers wait till the new year before they start to stimulate again? Probably they will. Personally, I feel the Ukrainians are going to change the balance of the conflict. And I think that's very important, weirdly enough. I think once they start to gain ground and show victories, and once the Russian regime starts to wobble, I think the world might suddenly take on new growth again.
Yeah. Okay. Well, let's hope. John, thanks so much indeed for your time looking at the commodity sector and what may pull us out of this current downturn. That's John Meyer from SP Angel.